Steve, I want to go to Mortar and Brick at 760 Madison Avenue. Hermes is taking a landmark building of brick and mortar, and they're building it out, and it really speaks to the durability of on-site retail versus Amazon. Tell us about the presumed death of Mortar and Brick.
And I think this death of retail and brick and mortar was so short-lived. The brick and mortar retail is back. If you look at the Mastercard Spending Pulse data, it would tell you that for the month of July, for example, brick and mortar was up 15% versus a year ago and represented 82% of all commerce. So while the digital has transformed shopping, people want omni-channel, they want product whenever and wherever they want to get it, the physical retail store is back. And you're seeing it across the board. And the Hermes example that you just gave is a good one relative to stores are reopening. There are more reopenings of physical stores right now than we've seen in years. I'm not talking about reopening of closed stores. I'm talking about opening new stores. So luxury is back. What you find is that across all levels, the lower end, the high end, you're seeing people back in the stores. They want to experience shopping. They miss shopping in the physical store. Yes, they're buying online. And yes, brick and mortar has gone, digital has gone from 12% of commerce to 18% of commerce. But luxury and physical retail is back.
How will Amazon respond to this, all of this, the pandemic? How does Amazon, with a relatively small part of your world, how do they expand their world?
Well, I think Amazon is the gold standard in terms of the experience that consumers get. Remember, they want an omni-channel experience. They want the physical store, but they also want the convenience of online. So online, I would never underestimate Amazon and its power and the impact that it has on the rest of commerce. But I would tell you that the brick and mortar physical store, use examples like a Warby Parker, where when they open a physical store, they get triple their digital business. So it's this interaction of the physical and the digital that is so important. And in the post-pandemic world, we've seen how important the digital piece of it is, but it's not digital alone.
Steve,
and that really is the story of what you're seeing in the data.
Steve, talking about the changing nature of brick and mortar with the digital aspect of it, I'm curious about the location of where brick and mortar is coming back fastest, since there has been a migration. And when I look on Manhattan streets, for example, there are still a lot of empty storefronts for rent for retail.
Yeah, I think that you've got to take New York a little bit as an anomaly to what's going on around the country, because so much of the New York business, let's take the luxury side of it as an example, somewhere around 25–30% of it is tied to international tourism, which isn't there right now. So New York, I believe, does have some shorter term issues. Long term, it'll come back. But I think that you're seeing it across you're seeing some shift back to the malls. Mall's performance was positive in the last several months. Look at the numbers that Simon's putting on the board. So I think that it's going to be a back into certainly some of the malls. Suburban markets are performing well, and a lot of the secondary cities are performing very well. I think New York's a little bit slower than other cities, but I think that you're in a period of time where this is a little bit of a Goldilocks retail environment, because I have never seen in years almost every sector of the Mastercard categories performing well. Luxury, look at the numbers. You're up 50% versus the pre-pandemic period. Luxury, jewelry. Department stores are up 7% versus a pre-pandemic period. You're looking at apparel growing at 10% versus 19. I'm not talking about last year's numbers. That's last year was an anomaly because of the pandemic, but versus pre-pandemic levels. And that leads you back to your question about stores opening up in the urban areas and some of the suburban, because when you see this kind of growth and the omni-channel presence, the consumer's there, so retailers start opening stores again.
So just what would you say to people who say this is somewhat idiosyncratic? People are getting back to work. They have to restock their wardrobes, perhaps after the pandemic 15 or whatever you want to say. They're going back to school. There's a huge seasonal factor here that could potentially be pushing these numbers way beyond where they will be averaged out by the end of the year. What do you say to people who would argue that?
Well, I think that there's some element of, you've got the benefit of the child tax credit, for example, that's helping you saw a bump in the end of July in the Mastercard numbers as a result of that. I think you have this near-term phenomena of a shortage of inventory. Right now, you can't find product, so you're having very high full-price selling. Gross margins are favorable. Your supply chain costs are high. And that's going to start to even itself out as you get into next year when more inventory is going to be available. I think that right now you've got a period for the next 3 to 6 months where it's a little bit of the power is in the hands of the retailer relative to the promotional environment, and people have to grab product when they can because it's hard to find the kind of product you want, especially unique, differentiated items. But longer term, this is in retail, I've seen it so many cycles where when product becomes available, retailers will order more product. You're going to start to see more availability as you come back into next year because there's always that desire to catch the last sale. And then I wouldn't be surprised as it go a year from now, you're going to find that you're back to a much more normalized inventory environment.